Yeah, morning, Chase. Obviously, a lot of focus on the data that we need to navigate our portfolios through. Very strong Japan GDP numbers, an improved ZEW survey in Europe. Retail sales numbers in the US were up 0.7%. We saw the control group element up 1%, which was hotter than expected. We saw UK wages hot. And the China data yesterday got a really strong look in, as we saw retail sales coming in at 2.5%, notably there, as they're trying to boost consumption. And spurring by a cut by 15 basis points, the medium lending facility really isn't going to cut the mustard. We are waiting for a sort of a coherent fiscal plan to really move the markets there. But I think, how did that feed into markets? Well, going to commodity markets, we've seen them looking weak. Copper's down 1.6%. We're seeing crude down, nearly 2%. We're seeing nat gas, down about 4.6% at the moment, and gold eyeing a move into 1900 at the moment. Equity markets in the US have been weak. Certainly in Europe, we saw stocks down about 1%. FTSE was down 1.6%. But you could go into the S&P and we're down 1.2%. Nasdaq, similar sort of amounts. Russell down 1.3%. But breadth was pretty poor. 9% of stocks were higher on the day. We saw it led lower by energy and financials. We're sitting around 45.12 when we went home yesterday in S&P futures. And we're currently sitting around 44.50 odd. So we've lost about 1.3%, and that does need to be discounted into the Asian equity open. So we are expecting a heavy tape there when that moves over there. And of course, if you have a look at that daily chart of S&P futures, it does look pretty heavy. We've broken through that 50-day moving average with bearish reversal playing through, and we've made a lower low playing as well. Going to fixed income markets, you have seen sort of yields moving higher across the curve, whether you're looking at bunds, UK gilts, or treasuries, but it's real rates which I think captured the attention. You've got 5-year real rates at 213, up 5 basis points, and 10s which are broken out to the upside there. And I think that is weighing on risk. I think if you factor China and also what we're seeing in real rates, you can see why we've seen a bit of de-risking playing through. FX markets, where it's the pound which has been the star performer there. You can see certainly good gains against the Aussie, against the Kiwi. We've got cable north of 127. And that's going to be something I'm watching very closely. We've got UK CPI numbers in the session ahead. Market's got sort of 6.8% in mind there. And also new home sales numbers in China. But China very much forefront today.